Hi, my name is Mark Walhout, and I want to spend a few minutes talking about equity returns so far in 2022. We're off to a bit of a bumpy start in world equity markets, and it might cause some people to wonder, does a bad start to the year forecast negative returns for the rest of the year? And I was listening to a podcast yesterday with Larry Swedger where he was talking about the impact of negative returns in January and whether that forecasts negative returns for the rest of the year. And so I thought I'd dig into that a little bit more deeply, and I'm going to show you a chart here that puts this in a bit of a visual. What the red dots represent are the returns for January on the S&P 500 going back to 1926. And then the blue bars represent the return for the year for the S&P 500 for each of those years going back to 1926. And what you can see in the data is that even though there are a lot of years where the returns for the S&P 500 in January were negative, it still had a net positive return for the year. And the actual numbers show that in years where returns for the S&P 500 were negative in January, the index went on to have a positive return about 60% of the time. So what can we take away from this? I think the answer is that, regardless of what happens in January in terms of equity market returns, we don't necessarily expect that those are going to forecast what's going to happen for the rest of the year. And that's kind of what shows up in the data. And so the advice to investors is to maintain an asset allocation that you can stick with that fits your plan and do the best you can not to take what's going on right now and think that that's going to forecast what's going to happen in markets for the rest of the year. I hope that you found this interesting. Drop any questions or comments below, and I will speak with you next time. Take care.